Welcome back to the Brent Bruce Daily. Happy Halloween. Today is October the 31st, 2022. It is now 2:40 p.m. Central Time. Now, we have a couple of reports coming out this week that will be a little scary. First of all, the Federal Reserve is going to be announcing their federal funds rate analysis, or really in this case, increase. And it is almost entirely expected that they will increase the federal funds rate by 0.75% on Wednesday. Now, remember, if you don't know that the Federal Reserve increasing the federal funds rate does not necessarily increase home loan interest rates, then you need to go back and watch some more of this Brent Bruce Daily. You need to make sure to go to my YouTube page. While you're there, if you like this information, make sure that you guys all hit that like button and subscribe. Make sure you don't miss any information. But number one thing you need to understand is that the Federal Reserve does not directly control home loan interest rates. I'll say that over and over again because so many people don't know that that is actually the case. So we're going to hear the Federal Reserve probably increase the federal funds rate by 0.75% on Wednesday. Now, we also expect them to increase the federal funds rate by probably 0.5% in December. Now, that I think will be even more interesting because if they stick to that 0.5% and don't decide to go another 0.75%, then they're basically saying that they feel inflation is subsiding and coming under control. And that is what we want to happen. That is when we're going to start to see home loan interest rates begin to come back down. The second report that we have to pay attention to is the jobs number, the BLS jobs number that is coming out on Friday, which is not as directly connected to home loan interest rates, but is important because it is an economic, it is a reading of the overall economy and what's going on with employment. So let's take a look at where we are on the charts right now. Right now, we're down 55 basis points on the mortgage-backed security. Earlier today, I saw us down 75. So this is actually good to see us bouncing back a little bit. Take a look at the 10-year Treasury, now over that 4.0. Remember, we were under it for a little while. We're over that 4.0 at 4.089. We want to get under that 4%. I don't like being above that 4%. So where are we on the charts over here? You can see right here, look at how accurate technical indicators are. You guys probably don't understand that traders and investors look to technical indicators as part of the decision-making that they make when they are looking to buy large amounts of certain investments. So if you take a look and begin to understand what is going on here, this is the 25-day moving average of this mortgage-backed security. So because rates have been going down, that's why the 25-day moving average is going down. This is a trend line. However, it also acts as a technical ceiling of resistance or floor of support, as it is in this case. So you see that we fought with it on, I think this was Thursday. We fought with it on Friday. Both times we ended up green, having positive days. Look, we had a great run last week, but today we're bouncing back a little bit. You can see that we banged up onto this ceiling of resistance at the 25-day moving average and now are pushing back down, okay? So this is something that we always have to watch whenever we're having a good run and we come up against one of these lines, which are technical indicators, we might see a slowdown. And you begin to understand how to kind of look into and make predictions as to what, or at least suggestions as to what's going to happen with mortgage-backed securities and home loan interest rates in the near future. So let's go up here. Now, why today are we down 53 basis points? I think it is because, again, because we have such big report coming out on Wednesday, that the banks and the investment community are basically pulling back a little bit, holding on to their money, just in case something comes out from the Federal Reserve that they don't want to hear, that is painful to the bond market. And that's why they're probably pulling back a little bit. You're going to probably see home loan interest rates tick up a little bit either today, Monday, or Tuesday in front of Wednesday's announcement, just in case they want to have a little bit of hedge in there, just in case the report comes out with something that they don't like. They're not going to lose as much money because they have a little bit of extra profit built in. And that's traditionally what we see. So let's take a look here and look at where we are on the home loan interest rates for the Brent Bruce Daily. As I pull this up here, remember that the Brent Bruce Daily is a very well qualified 30-year fixed conventional 800 FICO score, 25% down, single family residence, primary residence, everything that you would want in a client. So this is the very best of the best. So right now you're seeing we are hanging on to 6.99. We were at 6.99 on Friday. We're down 53, but we're still at 6.99 with 11, which is great. Now, again, I don't really talk about this very much, but understand that these banks over here are the banks that I have contracted with. My company has contracted with these banks. A standard consumer cannot go get a home loan from these banks. These are only wholesale banks that sell through brokers, okay? So keep that in mind. For 6.99% is the rate that I would be giving to my client today with the parameters that you're seeing there. These are the actual parameters. These are my actual rates without any points, any origination points, any discount points. This is actually what I sell to my clients. A lot of people don't believe that because it's so much lower than your traditional mortgage banker. So here we are. I ran it again. We're going to be at 6.99 with a little bit of a lender credit, okay? What if we want to pay a point? Let's open this up. If you want to pay a point, you're going to be stuck between 6.75 and 6.625 right here. Not a lot of benefit to that. I probably would not suggest it. All right. So make sure, again, that you do like, subscribe, and share to the YouTube channel. But also keep in mind that we are really gearing up for Wednesday. So Wednesday is the day we're going to hear from the Federal Reserve. And again, hopefully we will continue with my expectation that last week or a little bit earlier in the week was kind of the end of the rise on the roller coaster that we've been on for 9-10 months now, right? So time will tell. You can either say, hey, you got it right, or you can say, hey, you got it wrong. We're probably going to know here in about 6 months anyway. But I do see reason to believe that home loan interest rates will begin to come down into December and the first quarter. And I'm going to put out another prediction right here that I think that we will see a 4% interest rate, 4.875, 4.99 in, I'm going to say, the end of the second quarter. By the end of the second quarter. So you write that down, put it a sticky note up there so you can give me a hard time if that is not the case. But I'm going to kind of stick my neck out and I'm going to say we might see a 4 on one of the interest rates for the Brent Bruce Daily here by the end of the second quarter, and we'll have a nice ride all the way till we get there. So let's take a look. Have a great day and enjoy your Halloween. Be safe. Talk to you tomorrow.